Yo, what's up, guys? Hope you are doing well today. Today was my first day starting my new trading combine with Topstep, a 50K account. So, yeah, going into the day, I did want to de risk a little bit, especially with yesterday being FOMC. Usually, the days after high impact news like CPI or FOMC can just lead to choppy and inefficient price action to trade. So, I did end up trading today. AM session was absolutely terrible, so I did not trade that. But PM session, I was looking for some trades, right? Hopped on this morning, saw how bad price action was, hopped off at like 11 o'clock. See how bad it was. All of it just wicking around everywhere. Just wasn't even worth it. Just hopped off the charts, waited for the PM session, right? And so, starting off, I did end up losing. I lost, I think, 75, 76 bucks, 75 bucks. I did de-risk a lot. I did some micro contracts. I did de-risk a lot. So I wouldn't get my account started on a bad foot, I guess you could say, a bad note. So going over the trade and going over my analysis behind it. On the 4 hour right here, we have the Tuesday low right here. This is the low of the week right here, right? So I set up on the hourly, I set up the standard deviations. -2 to -2.5 is known for reversals or retracements. So yesterday we hit this level from FOMC, and I was possibly expecting a retracement today or a complete reversal, right? So now going into the same thing. I don't know what I'm done. We have a balanced price range, a BPR, and this is my point of interest at the time, high time frame PD array. And it was going to help me out with the day and where the market was going to go, where I thought it was going to go. So right here we have the bounce price range. A bounce price range, all it is pretty much fair value gap right here that aligns with another fair value gap on the opposing side. ICT teaches it, and if you want me to, I will link the video in the description after this. So if you want to learn more about that, more in depth, we'll link it in the description. But so yeah, we had this 1 hour BPR, and that was my main point of interest right there going into today. We did have SMT at the time. I thought it was SMT with NASDAQ. You can see it right here. This is creating a lower low, and then ES was creating a higher high at the time. But I didn't know it was a six sister. I had no clue. So they're going over the trade right here. We took out buy side liquidity, we took out buy stops, dropped down. And then this is where I thought we were like, okay, we just took out some sell stops, took out sell side liquidity. We just hit this BPR, this high time frame POI, and now I was expecting bullish prices, right? So right here, we have, I see right here, so right here is about the medium, right? Medium of this BPR. You could see right here that it respects, it was stopping right on the consequent encroachment of this BPR. So okay, that was a pretty good indicator for me that price is pretty bullish. It was looking pretty bullish from here. It was just wicking outside of it. So that was a good indicator. And then these other confluences, right? So I see this inverse fair value gap, or this 5-minute SIBI right here. It gets disrespected on this candle. It gets closed over, right? And then we have this breaker block, right? So once it closed over, I was going to go long. Once it retraced back into this inverse fair value gap within this breaker block, I decided to go long and target this high right here. And I quickly got stopped out within like 3 minutes, and that's all right. I learned exactly why I lost like 10 minutes after. So right here, actually, let's go over DXY first. So NASDAQ and all that. DXY, right? This is where I messed up today. All right, so at the beginning of the day, I saw that there was this 1 hour SIBI, right? This huge 1 hour SIBI from FOMC. Wait, was this from FOMC? Yeah, from FOMC yesterday, right? Huge SIBI, and it gets disrespected at 11 a.m. It gets inversed and body closed over it. So that means that we are expecting price to be bullish, right? Especially when it's this big of a SIBI. When it gets inversed, you're expecting price to be bullish. It also respects this 1 hour BISI right here, and it taps into it and then continues kind of going higher a little bit, right? So it's respecting that. It's not closing over this. It respects both of these, right? For both, it's just a good indicator of bullish price action. And I completely forgot about this. How this 1 hour SIBI just got closed over and it's inversed, and we're expecting higher prices on DXY on the higher time frame. Completely forgot about that, and this is why a high time frame analysis when you're in the market is so important. You got to keep on checking it. I was so stuck with this. I was looking at this. I was like, oh, it's about to close. It's about to close under this. It's about to close under this, and then I'm gonna go long, right? So on ES, that's what I'm at. I'm gonna go long in ES once it closes below this, and that's mean bearish price action. That's gonna inverse. No, we're in higher time frame. You talk about higher time frame. High time frame holds higher power. So it closed over these SIBIs. So we're expecting higher price action simply on DXY. And when we're expecting higher price action on DXY, on the indices, we're expecting lower price action. And I completely forgot about this at the time. So I went for a long and not remembering that we're expecting higher price on DXY. And that's why I lost. Right? Even though it was a decent setup with SMT at the time that I thought it was, we could have taken a way better trade that would have actually aligned with everything, and we would have won, right? So right here, same BPR. We have this hourly BPR, right? And then we have this sell side liquidity target, right? So on the 5 minute right here, we have the standard deviation set from the body's high and low, and target around -2 to -2.5 range-ish right here, right? This is where we expect a retracement or a reversal, right? So I expected price to come down and take these this sell side liquidity as well as tap into this BPR, this higher time frame point of interest, like we were talking about earlier. I tried to take a trade off of the BPR, right? That didn't work out. So I should have taken a trade to the BPR, expecting bearish price action. I was expecting bullish the entire time, completely forgetting about DXY, right? So right here we have this market structure shift. Right here, and this is the breaker, right? At this breaker, we have this very small BPR. That's this fair value gap aligned with this fair value gap. So this is the bounce price range as well. And then we have this order block right here. That price closes over, validates it, retraces into it right here, drops back down, retraces into it again by the tick right here. You could have taken this second re-entry right here, but I don't really like taking trades off of just solely order blocks. So yeah, I entered off of the BPR, the opening or the bottom of the BPR within the mitigation block, put my stop loss above this high, and then targeted this sell side liquidity that's right beside the -2.5 standard deviation, as well as the BPR, the 1 hour BPR. So that would have been a very solid trade. I'm disappointed I didn't see that, and I'm disappointed that I forgot about the DXY and what was the bias for DXY, but it's all right. I mean, we learn. I learned from this experience, and yeah. So going in tomorrow, we do have Powell speaking right here. So I'm not trading tomorrow just because of that. It's gonna be very bad. Almost like FOMC. It's gonna be very choppy. It's gonna be a gamble. So not trading tomorrow. Starting off the 50K account with a loss, very small loss though. Keep the losses small. And if we continue this, and continue to learn, we will end up passing one of these accounts, and hopefully multiple. It just takes time, and I'm willing to give it time, right? And continue to learn. Today, it wasn't really considered a loss for me, right? Because I actually learned from it, and I learned a key point to stay on the higher time frame. Make sure to check on the higher time frame. Don't forget your true bias on other indices and other currencies that will align with the pair that you're trading on. So, yeah, if y'all enjoyed the recap today and found it helpful, drop a like and subscribe, and I'll see y'all later. Peace.